Wall Street collapsed on Thursday with Dow plunging almost 1861 points while S&P 500 and Nasdaq sunk more than 5% as US stock plunges on fears of a spurt in virus infection and dim outlook expressed by Fed. Financials and energy stocks were the worst hit during the day. Dow Jones Industrial Average fell almost 7% while S&P lost 188 points and Nasdaq closed 527 points below. Supreme Court strikes down the Asia demand of over rupees 4 lakh crore raise against PSUs but seeks an undertaking from telecom companies to secure payment in the staggered manner within the reasonable time frame. SBI board has approved 2.1% stake sale in SBI Life via OFS. SBI has to sell this stake in SBI Life in order to comply with the public stake norm. Indian Council of Medical Research said that the cases per lakh population in India is among the lowest in the world. The country is not in community transmission. This is FII derivative window. Let us look at first what FII did in futures segment. So since there was an expiry last day, so we have seen a long liquidation of almost 8,468 contracts, and they have created short on short side 5,396 contracts. So this resulted into the reduction of net long position to a very minimal level in last 5 trading sessions to 1915 contracts. Now let us look at what they did in the option side. So short put options were squared up, huge short put options were squared up, and we have seen that this resulted into the long put to quite a bit high level from last trading session. And on the contrary, if you look at the call, what they did in the call option side, they have liquidated 35,000 contracts almost on the long side of the call, and also liquidated short call position to the tune of 17,000 contracts. And this activity resulted into the reduction of long call option for the day. So net we can see they have reduced their net positions in long call, they have increased their net position on the put side, while on the future we can see that they have reduced their overall positions in futures. So the implications will be negative. We have seen the market plummeting last trading session, and the indication from SGX Nifty is also coming that market may open 300 points below because of the US market plummeted owing to the coronavirus infections resurgence and dim outlook expressed by the Fed. On your screen you can see the 30-minute chart of USDINR June future, and we have seen that USDINR consolidating since last so many days and making a formation of inverse head and shoulder, and that took long to break out, and that too on yesterday only it moves above the much anticipated 75.82 level and made a high of 75.98, then settled around 75.88, and the closing was beyond the 75.82. Now since the depth of this inverse head and shoulder formation is about around 62 paise, so as per the technicals the minimum achievable target would be the depth of the head from the neckline, so that is coming around 76.40. so this is minimum achievable target whenever the formation breaks out on the upper side. So and it may take some days to come, not necessarily that this trading session only. So since the breakout has already happened, we have seen the market plummeting world over as the resurgence of pandemic. So we can see in this scenario that USDINR moving towards 76.40, and the support will again come at 75.82. On your screen you can see the daily Nifty chart, and we have seen in last trading session that market largely respected the previous peak, which is positioned around 9890. Since the overseas cues are very negative, market is likely to open 300 points as indicated by the SGX Nifty, and the support is coming around the lower trend line, which is positioned around 9580 to 9550. So for today's trading session, these two price points will be very important going forward. Any breach below these levels, we may see a dipper cut in coming days, and that will mark the beginning of again a downtrend, or in other words the resumption of the downtrend which was earlier in the market is in the secondary uptrend. That secondary uptrend will terminate here to signal the termination of the secondary uptrend, and that will again be resumption of the bigger downtrend. So this price point should be marked as the boundary line, and if it takes a support, it will try to move up. So for today's trading session, 9580 to 9550 will be very important. On your screen you can see the daily charts of Bank Nifty, and we have seen that Bank Nifty is consolidated in a broader range in a rectangular formation. Now since the market is likely to open lower, taking cues from the overseas market, 20,200, that is 300 points lower than the yesterday's close, will be important level, and if it sustained below this level, we may see a deeper cut in Bank Nifty, and the next support comes around 19,400. So the two prices will be important for the day. If you find any meaningful information in this video, then subscribe my channel and press bell icon to get future notifications.